one thing that people do seem to be still going out and buying a lot of, it looks like, soda and snacks.
That much is for sure. And in true trademark form, PepsiCo is out with better than expected third quarter earnings results this morning. Growth was largely driven by another quarter of strong demand for beverages and snacks in emerging markets. The company did see slowing growth in its beverage business and called out it's dealing with volatile inflation, just like many other large companies right now. And as we just highlighted here, PepsiCo Vice Chairman and CFO Hugh Johnston joins us for a deeper look into the quarter. Hugh, good to see you fresh off your earnings call. I was definitely on it, of course. Something really caught my attention here before we even get into the quarter. You came out here in I would say not trademark form, provided 2022 guidance, saying that you are looking for growth in line with the long-term algorithm of the business. For investors not familiar with that algorithm, how fast do you see sales and profits growing next year, and why is that the case?
Yeah, happy to be with you, Brian. Good morning to everyone. Our long-term guidance on revenue has been mid-single-digit revenue growth and EPS high single-digit growth on a core constant currency basis. It is unusual for us. I think given the volatility, there were more questions out there than you would typically have at this time of year. Normally, we don't talk about the following year until February. But given just the sort of open questions that were out there because of all the volatility, we made a decision to provide investors with some clarity as best we can see it as we go into next year. So we do expect to see mid-single-digit revenue, high single-digit core constant currency EPS. And we think that'll be a terrific result, especially on top of what's been a really, really strong 2021.
Yeah, Hugh, I had to go run across my other room here to grab my pen. I did not expect to hear that from you guys here. But you also brought up, too, and I suspect this plays somewhat of a role in your bullish outlook here. With consumers, you are seeing consumers essentially go into grocery stores and not showing much resistance to the price increases that you've put into the market. Why do you think that's the case?
Well, I think a variety of reasons, some of which are specific to us. We really have been investing heavily in our brands, and we've been investing heavily in innovation across really all of the various subcategories that we play in, snacks as well as beverages. And I think we're providing products that consumers are willing to pay more for. So, with the differentiation that we have and with the fact that our brands are as loved as they are, I think there is a willingness to pay more for those types of products. In addition to that, I think more broadly, consumers to some degree have been conditioned to price increases across a variety of categories. There's really no company that's immune to what's been happening in terms of commodity as well as operating expense inflation, and everyone's prices are going up a little bit. In a world where prices are increasing, again, on a relative basis, our prices are still somewhat low. And as a result of that, we're that simple treat or that simple pleasure that people choose to enjoy. And it's worth it to them to pay a little bit more for it. So the elasticity has been relatively low on these price increases, and I expect that'll be the case across 22 as well.
I want to pick up, Hugh, it's Julie here. I want to pick up on that last point in particular, because as you're talking about having more visibility into 2022, are you going to continue to be raising prices incrementally next year? Because as you know, this isn't just a question, of course, about Pepsi. It's a question about the U.S. economy and about the persistence of inflation. What can you tell us about that?
Yeah, it's a great question, Julie. Thanks for asking. So with the way we've handled our price increases, we did increase prices a bit in the summer on the Gatorade business. The beverage business more broadly had some price increases in September across just about all of the product lines. And then the snack food business really increased prices in October. The way that we work in terms of our commodity inflation is we tend to buy about 6 to 9 months in advance. So by the time we get to February, we've got pretty good visibility into what the rest of the year looks like. My expectation is there'll probably be one more round of price increases in the first quarter as we sort of finalize what the cost outlook looks like. And we also get a better feel for what the consumer outlook is in 22.
And Hugh, can you drill down into that commodity inflation for us a little bit? As I was talking about, I don't know if you heard before your segment, we were talking about oil prices now in the U.S. pushing towards $80 a barrel. There are some forecasts that we could even get to $100 a barrel in the fourth quarter. Now, if you're buying 6 to 9 months in advance, that would put you up, beyond the first quarter next year, with seeing potentially a significant increase again in commodities?
Yeah, so as I said, we are generally 6 to 9 months out. In addition to that, our commodity basket is pretty broad. There's no individual commodity that even makes up 10% of the basket, so we buy a pretty wide variety. It's tough to sort of pick one commodity and understand the impact on our overall basket. When it comes to what our expectations are for commodities in 22, we'll talk about all that in February when we have a better sense for it. But I do think we certainly expect some inflation based on the forward buying that we've done already into next year.
Hugh, lots of discussion on the earnings call this morning about your efforts with Hard Mountain Dew, your initial foray into the alcohol market. When does that drink, when will that hit the market? And then secondarily, you did note on the call that you have a pipeline of products here. So it sounds to me you're going to be making a broader push into the industry, right?
Well, as we noted on the call, it's a very big category. It's a category with lots of attractive characteristics, both financially and from a consumer perspective. And it's in an area that we're familiar with. We wanted to make sure that we had a partner that we felt like we could collaborate well and innovate well with, and Boston Beer is terrific in that regard. Dave Berwick, who is the CEO of Boston Beer, is a former PepsiCo executive. He understands his business and he understands what we do pretty well. So we kind of see this as a really interesting opportunity, and we're hoping it's a really big opportunity. So we'll see how it plays out over time. You'll see the first products in the first half of next year, and then we'll take it from there and see how big we can make it.
All right, fair enough. And also, too, we talked when you announced the sale of the Tropicana division. How do you plan to use those proceeds? And are there other parts of the business you're looking at for divesting?
No other plans to divest anything else. I'll clear that one right away. In terms of the use of proceeds, what we've said is, look, we're losing some EBITDA, so obviously we're going to pay down some debt as a result of that. In addition to that, given the growth in the company right now, we're going to invest in organic CapEx to help continue to facilitate the growth that we're experiencing. So those will be the primary use of proceeds.